Investor Connect podcast program. This is Hall T. Martin. I'm the host of the show, in which we interview angel investors, venture capital, private equity, family offices, and many other investor groups for startups and growth companies. I hope you enjoy this episode. Thank you for joining us. Well, hello, this is Hall Martin with Investor Connect. Today we're here with Kerry Rupp of True Wealth Ventures. Kerry, thank you for joining us.
Thanks for having me.
Well, great. So what was your background before investing in early stage companies?
So I spent about 20 years in the early stage technology space, essentially mostly at early stage companies. Of course, the nature of those is that they eventually, if things are going well, get acquired. And so I had some stints in my career where I was at bigger companies who had merged with or acquired my startups. But I came out of college, I literally went right into coding, actually. It was a short-lived part of my career, but that's what got me into tech to start through Anderson Consulting, which of course is now Accenture. And one of my first clients there was a startup. And I actually jumped ship from the consulting side over to that startup, which was at the time about 20 people, and it grew to about 200 people, and kind of caught the bug for the fast-moving pace and lack of bureaucracy at startups and the ability to really respond quickly to customer needs. And so over that next 20 years, I did everything from product management, biz dev, marketing, strategy, ops, sales, basically everything except for coding after that first role in early stage startups. And so when I went with some former business partners to run one of the first accelerators in the market, we really fell upon investing in those startups by accident. And by that, I mean, we didn't set out to create a venture fund next to the accelerator, but once we were running what I think was the third accelerator in the market, DreamIt Ventures, we realized that we knew a lot about which startups were good and needed funding, and the startups needed it. And so we realized the business opportunity or the right model for the accelerator was to create an investment vehicle. And so we did that because it sprung out of the accelerator as opposed to intentionally trying to go out to be an investor. It was just the right thing to do at that time.
Well, great. So what excites you right now?
Well, because probably where I spend my time is focusing on early stage women-led businesses. I think it's really exciting, sort of the surge of attention that space is finally getting. And what I mean by that is there are lots of businesses that hadn't gotten attention before, frankly, because of pattern matching, which is a useful tool in early stage investing. There's a reason that people do pattern matching. It's an efficient way to say, hey, I've seen something like this be successful before, let me invest again. But what it's meant has been the same kind of companies and the same kind of entrepreneurs have been getting funded by the same kind of investors. And now that there are new investors like us who are women, who are focused on women entrepreneurs, they're actually addressing new kinds of problems that maybe didn't get the attention before. And a most obvious example of it, because it's sort of the most clear one to see how it might have happened, is women's health related innovation. So when the industry was literally 90 to 99% male investors, they literally just didn't understand maybe the problem with a breast pump that had been designed in the 1950s, or didn't understand the problems of menopause or fertility or menstruation issues or post-pregnancy stress incontinence and things like that. And so while they want to be empathetic to the opportunity, they don't have the same kind of connection to it. And now that there are more women investors and women entrepreneurs kind of taking the reins here, we're starting to see a lot of innovation in sectors that were just ignored previously. And I just think women's health is a good way to kind of point out what that might look like. It's not the only sector where that's happening. Women see problems in their day-to-day life, whether that's at work or at home, and they just look at things differently. And so they're bringing solutions to market that are new and different, which is always great for startups where you're looking for innovative business models and technologies.
Well, great. So what's your advice for people investing in women-led businesses? What should they think about first before they write that check?
I mean, the fundamentals of choosing a company probably don't change based on the gender of the startup. What we think is different is that there's a lot of data that shows that having that diversity on a team, whether that's a Fortune 500 publicly traded company team or a venture-backed startup, the diversity is what brings benefit to the startup's performance. That data has been proven from McKinsey and American Express and the Kauffman Foundation, et cetera, across the line, that actually does make for better financial outcomes. And so we think taking a look at the team is, with all investors, sort of the number one criteria. Or most investors, that's number one. Number two is probably like size of the market opportunity, the solution itself, et cetera. is really looking to see, is there something particularly strategic about the team themselves and their capacity to be those investors, but that diversity might bring to bear. So for example, we're not just at our fund looking only at women-led companies. We're looking at women-led companies where having a woman on the executive team leads to more strategic advantage because they're going to have better insight into the customers in the markets that we're looking at. And we can talk more about that later. But for example, we're looking at consumer health and sustainable consumer areas where women make up 80 to 85% of the customer base. And so we have that woman executive on the founding or executive team of the company intentionally in these markets because they're going to have better insight into the customer. And so it's not just women-led startups for the sake of it, but for the potential of a higher financial return strategically.
So on the other side of that table, what's your advice for women running startups? What do you advise them to do?
Well, so fortunately now this data is starting to get more widespread, but just in case, just to set the context, despite the financial outperformance that's been shown by the reports that I mentioned earlier by McKinsey and Amex, et cetera, the funding isn't going there commensurately. So even just this past year, 2018, I think only 2.2% of startup or VC funding went to companies with a woman CEO. So despite the companies performing well, there's something broken in the investment landscape in terms of getting funding to those companies. And there's some theories, and some of which have research data behind them as to some of the reasons why that might be. And so the more women entrepreneurs are educated about how to potentially mitigate those issues, the better. And so I think I can give one research-based and one based on my theory. The first is there's been a study that was done at the TechCrunch Disrupt conference, I think by some academics at Columbia. I think it was published, though, in HBR, that showed that when women were pitching their businesses, investors tended to ask them what were considered prevention-oriented questions, whereas they asked the males promotion-oriented questions. And so an example of a promotion-oriented question to a male might be, what other markets could you get into? How big could it be? That kind of thing. And whereas the women were tended to be asked questions like, how do you mitigate this risk? What if the competition comes in? What if this bad thing happens after another? And that was true whether the investor asking the question was a woman or a man. So it's not that it was like men were against women. It's just sort of cultural history and bias is against women. And so if the women are keen to hearing when they get that kind of question, knowing how to turn around and talk about the promotion-oriented stuff about their business, not ignoring the question, but addressing the potential risk and then talking about the opportunity can flip the perspective that the listener, that judge, that questioning person can hear about their business opportunity. And that just requires being aware of the bias and acting on it. Another one, which I think is not coming out of a research study, but more just my own and other investors, kind of what we've seen happen in the market, is that a lot of times women do outperform, or companies with women on the team do tend to outperform. And our theory around that is that women tend to be more pragmatic about when they're making expectations around what can I meet in terms of my budget or my revenue forecast, what's my operating plan. They're going to put something on the table that they know they can over deliver on. And that's great for meeting your expectations, but that's usually the smaller, more achievable plan. And when you're in sales mode, whether that's literally with a customer or selling to an investor, you need to talk about the best possible case scenario in the big picture. And understanding the difference between those things is important, and knowing that you're not telling an untruth if you're saying this is how big it could be. You're just not promising you're going to get there right away, on a direct straight line path. And from our experience, and of course, there's always generalizations and stereotypes in here, so I don't mean everyone all the time, but women tend to not sell that big picture as well as men do. And we think that's one of the reasons that they get funded, whereas women need to sort of understand how to do that. And it parallels what you've probably heard anecdotally, that when men see a job description, that they meet like 40% of the criteria or the prior experience, they're like, I can do that, and they apply for it. And women tend to need to see that they've checked every box 100%. And it's that same kind of mindset that we don't know how that's all been instilled in us culturally that's probably inhibiting their ability to sell big in the VC pitches. And again, just being conscious of it and learning how to mitigate it can help them be more successful, we think, in that process.
Well, that's great. Let's talk about the state of investing in women-led startups. We hear a lot about it in the press and other areas. How is the industry evolving from your point of view, and what changes do you see coming up?
Well, certainly there's been a lot more attention to it. So when we started raising our fund 4 years ago, there were only 6 funds that had an explicit focus on investing in women-led startups, and they were literally all on the coast, mostly New York and California. I think there was a little outpost in Oregon. So nobody in the whole center of the country, i.e., the other sort of 48 continental U.S. or the other 48 states. And so that's changed. There are more funds explicitly focused on women-led companies. But also there's been a lot more attention to, I think, two important things, which is bringing more women into investing roles and senior, investment decision-making roles at VC funds and being proactive about a diversity strategy, not for the sake of it, for some social good, but literally because the data shows that just diverse teams actually outperform. And that data is not just about gender. It's often that different socioeconomic backgrounds and different ethnicities and different backgrounds in general bring new decisions and ideas and opportunities to the table of teams, not just business teams. But gender is one of the sort of easiest to target as the first way to attack diversity. And so I think it's important that there are more women investors, not just firms looking at women, because there's data that shows that when there are more women at an investment firm, that firm is twice as likely to invest in a company with a woman founder and 3 times as likely to invest in a company with a woman CEO. That's particularly true when an investment firm has at least 2 women investors. So it's not just that token woman who gets sent all the deals that have a woman, even if it's not the sector they're interested in. And in that case, that woman also might actually literally be more prone to not look like they're over investing in women relative to men. And so there's some, the pendulum kind of swings the other way. So once we start to normalize and integrate more women into investment decision-making roles, then we start to see more women-led companies getting funded. And so then it starts to become more normal, and hopefully we can move that lever. Because right now it moved from, I think the numbers in 2016 or 2017 were 2.0% of funding went to women. In 2018, it was 2.2%. That's just not a fast enough level of growth, given how ridiculously out of whack it is to be sitting here in 2019 and women are still only comprising such a small number of investments. So it's changing. It's just not changing fast enough. And I think the more we incorporate women as angel investors, which, by the way, is the sector that has been growing a lot. It's grown, I can't remember the exact numbers, but maybe it was 10, 15 years ago, it was 2 to 4% of angels were women. And now it's something like 20 to 25%. And so that sector is growing. We're starting to get more women, VC partners. It fell for a while. It was at 10% of VCs in the 90s were women. It fell to 2 or 3%. And now it's hopefully back up to close to 10%. But those things, there's more attention to it. There's more attention to the value of it, literally the financial return value of it. And so hopefully that momentum continues.
So let's talk about your fund. What is your investment thesis for this sector? And what is your specific criteria that you're looking for?
Yeah. So we invest explicitly in what we call women-led companies. And the way we define that as at least one woman of significant decision-making authority is on that founding or executive team. And so that doesn't have to be a CEO role, although of the 8 companies in which we've invested so far, 7 of them are the CEO. And in the 8th case, it's a founder and the chief revenue and marketing officer. And there is no specific percent on the cap table for us because there's so many dynamics about, who put in sweat equity and who put in cash and what my history of the company might be. But we want that woman to have a significant stake on the cap table. She is one of the people that influences decisions. But I think it's important to note that can mean that you have a founding team of 4 people and only one of those 4 is a woman. And in our criteria, that's woman-led as long as her role is significant and she's on par with the other team members. And the first layer of that thesis for us is literally around the data that shows that these women-led companies outperform. The data that I referenced that the Kauffman Foundation study came up with was specifically around venture-backed startups. And I might get the numbers off a little bit, but it's something like 30% higher return on investment, 15% higher return on investment, 30% higher revenue growth when you did have a women-led team in venture. And so we figure those companies aren't getting funded, but they outperform financially. We're happy to take advantage of that opportunity. And that's level 1 of the thesis. But as I mentioned earlier, we're also more strategic about which markets do we want to be in. And we look at the fact that women make 85% of consumer purchase decisions, 80% of healthcare decisions. And so we're looking at those markets, more specifically the impact markets of consumer health and sustainable consumers. So things that are more environmentally friendly or sort of toxin-free related to the home. And we think that having a woman on the executive team, having insight into those customers in terms of product design, marketing strategy, go-to-market, et cetera, is going to have, again, an increased opportunity for financial outperformance. And so that's the sectors we're looking at. As an impact fund, we literally need companies that show it's core to the value proposition of the company. They're going to improve human health or improve environmental health. And so we're investing at the seed stage. We're a small fund, $20 million fund. And so that's sort of the best place for us to get our return profile back to our investors. So our first checks are, generally around $500K. We're doing priced equity rounds, tending to take board seats because both Sarah and I are bringing, 20 plus years of operating experience where we think we can be helpful to the companies. And then we're reserving 2/3 of the funds to follow on in some of the companies' A rounds and a couple fewer of the companies' B rounds. But targeting companies that see a pathway to an acquisition exit in a relatively short window, because in these markets, the bigger companies are tending to acquire small startups that have the credibility of being greener and cleaner and healthier, things that their customers are demanding and that they, as big companies, may not have the credibility or the innovation pipeline to build on their own, but need to have in their portfolio.
Is there a particular portfolio you can call out as a good example of that thesis?
Yeah, I guess I'll maybe just do a quick update on our two most recent ones, because one's in the sustainability side and one's in the healthcare side. So we invested in an early stage company out of Denver called Reblend, and it's in the food space, and they're taking food that would have been otherwise destined for the waste stream, so the imperfect or ugly produce that doesn't make it to the grocery store shelves, or waste from food processing. So imagine you're making spiral zucchini noodles and you have the core of that zucchini, or you're doing bulk juicing of fruits and vegetables and you have the remaining pulp. And they take that and turn it into smoothie type products. So their first product is a smoothie pop, kind of like those Otter Popsicles you might have had as a kid. And they also have blendable smoothie cubes that allow consumers to get access to healthy foods in other places that they wouldn't reach them. So they're going through non-traditional markets to retail these. So imagine you're at a hotel at a conference for breakfast, and the whole lineup of the buffet is what I consider cake, muffins, and bagels and pastries, and you just want something healthy, but you don't have the capacity to go blend a bunch of fruits and vegetables yourself. And frankly, the hotel, that's really onerous for them. So here's a pre-blended smoothie in a pop or in a cube that they can give to customers in that market. And they're doing it in Pilates gyms and in coffee shops and other kinds of non-traditional places where they can reach a lot of people who are looking for convenient, healthy food on the go. And at the same time, it's repurposing food that would have been destined for the waste stream, so they can really feel good about those choices since we're wasting so much food in this country. So that fits into our sustainable consumer category. And then our most recent investment in the medical space actually also is a food, quote unquote. It's a medical food. And it's replacing in the medical market the protein supplement and shakes and things like that people need. As it's been proven relatively recently how important food is as a function of your condition. Then they're starting in dialysis, where a significant portion of customers or patients who are getting dialysis today have to have a protein supplement next to their treatment in order to have the outcomes be higher. Yet today, those products have been around for a long time, and they're literally full of artificial sweeteners and colors and not great protein sources. They've just been around for a long time without innovation. They actually taste terrible. The viscosity is uncomfortable. And so they've created with dietitians a much healthier, cleaner, sort of newer, fresher product for that. And it improves health outcomes. And so similarly, they'll be taking on some of the other products in those sectors for cancer patients and the aging and just for general wellness. So if you've ever had a family member have to take Ensure or Boost to try to get calories into them when they're nauseated or just not hungry because of their medical condition, it's really hard to get that stuff down. And it is similarly full of not super healthy ingredients because it just hasn't been innovated in so long. And so this, again, is clean solutions, dietitian formulated with healthy ingredients.
So what are the challenges for women-led startups? What do they need to overcome in order to be successful?
Well, that first factor is literally just that today, for a whole series of both implicit, explicit bias and sort of lack of access to networks and all kinds of other structural things that we probably don't even understand, it's hard to get that first level of funding. And so while you certainly don't have to only find women investors, you have to find investors that can overcome that hurdle that's still out there. And that's not just true at the seed stage. And frankly, most of us that are focusing on women-led startups are at that stage. And so you might get your seed stage funding, but then that whole problem might rear its head again at the Series A. And so making sure you're building those potential future relationships with investors who get to see your progress over time and are excited about what you're doing, leveraging seed stage investors who have those relationships on your behalf to make introductions are really important. It's not all that different than what other startups have to do, but maybe you have to do twice as hard, unfortunately, right now. So I think that's a big factor, and really targeting investors who you know are going to be receptive to the kind of opportunity that you're working on.
Are there any particular applications you see as immediate opportunities for investors to pursue in this space?
Yeah, I mean, so certainly women are perfectly capable of doing and operating startups in areas that aren't related to women consumers and women's health, et cetera. So it's just that we see that's one of the more obvious places to see where women have particular insight. So there are women doing B2B SaaS software and heavy tech, and coming out of so many more women now are actually getting advanced degrees and STEM degrees, et cetera, that we see lots of cool things coming out of university labs, et cetera, too. But I guess I would say the most low-hanging fruit is in this women's health sector, because it has been ignored for so long, and there's really plenty of opportunity. In fact, if you look at some of the just technology that women have been using in the healthcare sector, because there has been, it's sort of archaic and painful and just not efficient. And so I would say that's some of the most obvious sort of low-hanging fruit for where bringing women's perspective to these products can be really valuable.
So, well, in the last few minutes that we have here, what else should we cover that we haven't?
I guess we talked a little bit about the importance of bringing more women investors into this sector because it was going to spur more women getting funded. There's just people know people and like people and invest in people that are like them. And so that sort of happens naturally. But there's also really, I would say, a real imperative that we get more women investing in both angel investing and venture capital, because of some demographic and financial wealth shifts that are happening. There's a book called The Power of the Purse, and in it, it talks about the fact that while women hold or control 40% of U.S. investable assets today, it's predicted to shift to 2/3 by 2030, which is really soon. It's a little over a decade. And it'll be the biggest demographic shift in wealth that the world has ever seen. Pretty dramatic. And it's so much of our innovation in this country today is coming from the early stage startup economy. And of course, all net new job growth comes from small business and growing businesses. We need to make sure that the people who are holding the capital and doing that investing continue to invest in that sector. And if that's changing hands from the men who have traditionally done this kind of investing into women, then we need to make sure women are getting educated about being asked for opportunities to invest in these sectors. And I'll just say, as someone who's been in the early stage sector for a long time, it wasn't until about a year or so that I realized I'd raised 2 venture funds, one with DreamIt and one with True Wealth Ventures. I have only ever been asked to invest in a fund once. I've been asked to invest in startups because people started seeing a track record of that, but I'm not even being asked to invest in funds. And I know that the men around me in my peer group who are also doing investing get invest all the time. So really changing who we're offering these opportunities up to, how we're educating people about it, and getting more women to start investing in this ecosystem when they're accredited investors and have capacity to do so is actually, I think, like a patriotic mission to continue our country's competitiveness around innovation.
Well, that's great. So how best for listeners to get back in touch with you?
Well, so one of the things that we make sure that we do is that every company, even if they apply over our website, will get looked at. We know that one of the reasons that women have less access to funding is they don't necessarily have the same networks. And a lot of VC funds will only really look at companies that have come in through an intro. So we make sure we'll look at everybody, even if they don't come through an intro. So we have a form on our website, truewealthventures.com, well, truewealthvc.com if you're actually typing out the URL, where they can get in touch with us. Of course, as with any interaction in life, if you come with an intro, it's going to be like a form of recommendation or referral. And so you'll get more attention that way. And so I would say Sarah and I are always out there speaking at events or attending events in town. And so if you can meet us or find someone who knows us, that's the best way to get in touch. And so the other thing we do is on the events page of our website, we note there in advance all the places where we'll be speaking or attending, with the intention being that you should use that list to come find us and meet us in real life. And so certainly you can find me on LinkedIn or use the contact us form on our website, but even better, try to find us after we finish a talk or know that we're going to be at an event, and our pictures are all over the website. You can find us and track us down.
Well, that's great. We'll put those in the show notes. I want to thank you for joining us today and hope to have you back for a follow-up soon.
Thanks so much, Paul. It was great to talk to you today.
Investor Connect helps investors interested in startup funding. In this podcast series, experienced investors share their experience and advice. You can learn more at investorconnect.org. Martin is the director of Investor Connect, which is a 501c3 nonprofit dedicated to the education of investors for early stage funding. All opinions expressed by Hall and podcast guests are solely their own opinions and do not reflect the opinion of Investor Connect. This podcast is for informational purposes only and should not be relied upon as a basis for investment decisions.